Welcome to Minding My Business, the CEO Story, Season 3. And this season is special to us because it's business leaders from the IPC space, the International Property Consultant space, and none better than Anshul Jain, Managing Director, India and Southeast Asia at Cushman Wakefield. Hey, I hope the Christmas cheer has come in nice and early this year, where in your part of the world.
Well, it's fantastic. If you see year on year, last year the streets were fairly empty with the various sort of restrictions around the world and here in Singapore. But this year, it's great to see a lot of real cheer on the street. So it's a fantastic change.
I believe there is a recovering inflow of investments driven by foreign investors. Could that be a strong indicator, Anshul, that despite global headwinds, the Indian economy and the real estate sector are in sync to tackle the imminent macroeconomic risks?
See, the Indian story has been pretty intact for some time now. The macroeconomic stability, continuity of policies, big effort of government on easing the ease of doing business, which are sort of global indicators, by all global indicators are doing quite well. And the largest reason of all, from an emerging market perspective, India is the only emerging market story, or large emerging market story, which is still standing. And therefore, the foreign investors are very bullish on India, whether it's in other sectors or in real estate. We've seen roughly $5.5 billion on an average flowing into the real estate sector. It keeps changing in terms of which sectors they're following. So, for example, last year was a big inflow into commercial real estate sector as residential kind of dropped. This year, given the residential momentum in country, inflow into residentials increased again. But overall, between $5 to $6 billion, a very steady rate of investment into country is what we've seen over the last few years.
I know that Cushman and Wakefield have been keeping a keen eye on the logistics and industrial sector. So how well is that doing? If it is in good shape, and I imagine it is it likely that the logistics and industrial development investment can match or even surpass the 2021 annual numbers?
See, from an overall perspective, logistics and industrial sector is largely under-penetrated in country, right? Just to give you an idea, I think China is about 10 to 15 times in terms of area per head of population. And US is 40 to 50 times per head of population in terms of actual area of logistics and warehousing in particular that's available. You think about the changes that GST has brought through, you think about push in the manufacturing sector, which we are seeing now some real changes on the ground. And you think about the penetration of e-commerce and everything sort of online in terms of business, and you think about just the large retailers reorganizing themselves around more modern warehousing and logistics. I think this sector is set to continue to grow at a very rapid pace over years. Now, it's a very tough sector to kind of grow because the land prices versus what you can build, etc., is always challenging. But given all the sort of trends that I spoke about, we're seeing a lot of investments coming through on an average of $1 billion, $1.5 billion a year, compared to under $100 million if we spoke about 4 or 5 years ago per year, right? So I think that momentum is strongly with us, and I think will continue very strongly over years to come.
Now, the real estate space is made up of the occupiers, the investors, as well as home buyers. Tightening monetary policy, particularly the pace that we saw in recent times, Anshul, is it likely to have an impact on sentiments within the real estate space, on those occupiers, investors, home buyers? And almost as a corollary to that question, what are the key things for us to watch in India when we look at the US and we will look at Europe?
Look, real estate is extremely sensitive to interest rate. There's no question about that, right? Because the big investors, when we talk about $5.5–6 billion of foreign direct investment, most of the investments that we do is leveraged, right? So you put in 20, 30, 40% of equity, and the balance is funded by the bank, depending on which sector are you investing in. If the interest rates rise very rapidly, it's very tough for funds to actually invest because they don't know the pricing of the debt that they're going to take. And this is precisely the problem the West is facing in particular, which is why while equity is available, banks have actually stopped lending debt, mostly in Western economies. In India, having said that, I think while there's been tightening of monetary policy, but it's, I think, still going through the reversal of the loosening monetary policy that we saw over the last sort of couple of years. And if you think about long term, when I say long term, over the last 5 or 10 years, the interest rates have been sort of relatively high compared to Western economies, higher than where they are in India right now. But generally, the Indian businesses and the Indian economy is used to that level of interest rate. So as long as it kind of comes back to where it was 3, 4, 5 years ago, I don't think there is going to be a big concern. But if it obviously starts surpassing that and becomes higher than that, then of course we'll see a bit of sluggishness coming through into the business as a result. Having said all of that, there's general, and having said, all from a macroeconomic perspective, everything is looking great. But if the world catches a cold, I think India will have to sneeze, kind of stuff, right? So you will probably see some slowdown coming through in 2023. It's a year of caution, I would say, but certainly not alarm.
That's well put. Let's talk of smaller cities gaining traction, driven by the recent past progresses in Indian real estate. Would you say tier 2 cities are poised to be new growth vectors in the coming years?
Absolutely. And I think a lot of that is actually driven by the local economy, the local business, the consumers, and obviously, the middle class getting richer. And therefore, the asset classes that may work in tier 2 would be very different from what works in tier 1, right? So, for example, I think, industrial logistics, perhaps manufacturing in areas which support manufacturing, perhaps retail and retail malls are going to do very well in tier 2. More organized residential is going to do well, maybe not as much as high rise, because high rise may not be the flavor in tier 2 markets, but organized residential with facilities. Everyone who doesn't like to have access to a swimming pool or a playing field, etc. So a bit more organized. I think those sectors will do very well. Office, I think, will do well in some parts. There are some tier 2 locations which have been favored by multinationals in the past, such as Kochi, Coimbatore, Jaipur, Chandigarh, perhaps Lucknow to some extent. But we don't anticipate masses of demand kind of going into tier 2 beyond the 5, 6 cities which have some momentum. But given the growth in local economies, a lot of multinationals will probably have more sales offices. A lot of Indian firms will have sales offices, and a lot of local firms will want to upgrade themselves from average quality commercial offices in tier 2 cities to better quality better quality space in tier 2 cities. So I think there'll be some uplift in demand, but largely the real estate story in tier 2, I think, will be driven by retail, industrial, logistics, warehousing, and organized residential.
Really interesting report titled Tech Cities, the Global Intersection of Talent and Real Estate. In that, Cushman Wakefield identified tech markets based on 14 criteria across talent, real estate, business environment metrics. I know it's a very detailed report, but I just want a kind of like an overview, if you could just talk us through the report.
Yeah, so, obviously we looked at, a number of parameters, but the main 3, broad areas were what you've already mentioned. So there is availability of talent, and I'd speak in context of India. So today in India, 20 years ago in India, we were talking about BPO, plain simple processes. We were talking about voice automation, related services. We're talking about perhaps simple development of software. 20 years later, what's happened is we are doing some of the most complicated software development work, which is around, let's say, whether it's artificial intelligence, whether it's kind of data security, whether it's cloud, name it, aeronautics industry, telecoms industry, everything, aviation, animation, everything is being developed in country right now, right, for Western economies and large multinationals. So that talent pool is just immense, and where that talent is coming from is, across the board, from engineering firms and also from management institutes. What's also happening is the firms have become so large that they are actually taking in a lot of this talent. They're actually spending 3 to 6 months just retraining the talent, because out of college you're very young, you're green. So they're actually retraining to what's required, but talent is kind of smart enough to kind of catch on to that and get on to that bandwagon. So one is talent. Second is obviously the government policies, which, as I mentioned before, has been fairly stable and progressively business friendly. And not only that, now you see various states vying for competition, or competing with each other to get investment in, which is the best thing that could happen to any country, right? Which was earlier seen with sort of Telangana and Andhra Pradesh and so on and so forth. While Andhra Pradesh, most governments now are kind of really proactive in bringing or trying to sell to bring investments in. Third is the general environment, which obviously, the state of the cities is not ideal right now, but the infrastructure development, etc., while it hasn't really kept pace, but still, if you look back 10 years or 5 years, I think most cities have developed significantly. And the fourth major thing is commercial real estate or office availability of good quality offices, availability of infrastructure such as strong telecom connectivity, etc. And all of that, India is kind of really much ahead of many other emerging markets, and therefore I think you look at Bangalore, Hyderabad, Pune, they finish really at the top end of the top tech cities in the world, according to our report.
Allow me to ask you about your own leadership skills. Forbes India published a list of India's 100 great people managers, Anshul, and you were on that list. How have you managed to develop deep personal relationships with developers, real estate funds, occupiers? We'd like to know your best practices and ideals.
Yeah, that's a hard one to explain, right? And I am quite proud and thankful for Forbes to be acknowledged there. But I think from a people perspective, I'll go first, right? And because we are a people's business, and a lot of people say that they're people's business. So the question is, what do you do with that, right? So number one, you start with the basic infrastructure, which is what are your policies, right? What you say. Does the company walk along with you and create those policies which are super friendly? So that's the basic minimum, I would say. But I think the most important thing is, do people have enough space to express themselves, to feel confident, to feel safe, to take risks, to innovate? So ultimately, my job is to create an environment within the firm where it's through the policy, but also through a culture, through example, of creating a space where people feel very comfortable, that they can grow, and then of course everything else, the success and compensation and everything else kind of comes with it, and it's all linked. So it's very simple. Just create environments where people can thrive, and hire the best. So I think that's the mantra that I kind of live with. In terms of relationships with the market, ultimately, if you are able to bring value, I mean, I've worked in Indian markets for over 25 years. It's been my home market, although I've kind of moved around quite a bit, still been very associated with India. And ultimately, if I can bring value to the clients, I can bring relationship management, and I can make sure that the clients, whichever sector they are, whether they're investors, occupiers, or developers, they are looked after in a culture where client comes first. And if you can drive that to the firm, you get acknowledged by the market, and you build relationships over time.
Office space is showing a lot of resilience. I believe the commercial office sector is growing, and transaction volumes have surpassed the pre-pandemic quarterly average. Could you give me your insights on that?
Yeah, so it almost surprised us in 21, I should say, in the year 21, because we had a whole 1 quarter of washout in 21 because of Delta wave, unfortunate Delta wave, which we all remember. But resilience of the Indian businesses, the Indian markets, and faith of large global firms in how India can bounce back actually showed a lot of growth in 21. I think the year 22 has been again a phenomenal year. It probably is likely to be our best year ever from an Indian commercial real estate absorption market. And I think part of that is there are two or three things happening. So one is upgradation of space, right? Because post-pandemic, there is this whole focus on wellness, health, and well-being effectively. So that's kind of number one. And the second factor that's also happened is with the global focus on sustainability post, COP23 and so on and so forth. Suddenly, you've got a big focus from multinationals to say the building, is it green enough for me to go to? And there is a lot of parameters around sustainability which has come into the decision-making criteria, which is forcing multinationals to choose greener building, because ultimately everybody is focused on creating net zero at some stage, right? And third thing is people are trying to reimagine their portfolio. Because you had sort of large concentration in large campuses, and should office be more dispersed now, or should there be various kinds of office to kind of to kind of meet the need for employee need for hybrid space, hybrid working effectively. So there are two or three things happening, and combined with that, the return to office has been improving. So in some sectors, it's kind of gone really high, 70 to 80%. In some other sectors, it's still lagging 20, 30%. But given the trend, most companies are saying that over the next year or two, they'll have a strong return to office, which then means, you need to sort of get more space. But lastly, I would point out to one factor. We did a small survey and we asked maybe about 25, 30 companies that if you had 100 people in March 2020, which was at the beginning of pandemic, how many do you have, let's say in October 2022, when this work was done? Most answers were between 150 to 200 people. So companies had grown by 50 to 100%, not all industries, but in the small sample survey, we said 50 to 100% on headcount. So you think about, you put all of that together, upgradation of space, return to office, a much higher number of people than the firms had, even with hybrid working. What do you really need? You need more space. And that's, we are seeing that manifesting in the market right now.
What about unicorns? Are they demanding more office space, or was that something that happened in July and then just petered down or died down? And if they're still demanding, which city leads the market?
Yeah, so unicorns, I think, mostly are in sort of big tech spaces. And I think, to be honest, it's been a mixed bag. Now, over last sort of 5 or 7 years, there's some 30 or 35 big absorbers of real estate have emerged, names which are not really massive in 2015-16. And last counts, there's something like 90 to 100 unicorns in India, billion-dollar companies in India, right? They've taken on an average, they've taken in the last sort of 4 or 5 years, 8 to 9 million square foot of space, which is kind of very significant. But we think that this space will remain erratic because most of these unicorns are now facing a lot of valuation pressure. There's a lot of push globally from markets to move into operational efficiencies and move into more sort of bottom line profit based rather than top line gross revenue based kind of valuation. So that transition is happening. And with that transition happening, I feel that most of the unicorns will become a lot more cost conscious because their mandate's kind of changing from just kind of driving revenue to kind of driving efficiency. And therefore, I think while they will continue to grow, we will probably see a bit of up and down as we kind of go over the next 1 or 2 years. And therefore, you will see some lumpy demand coming through, but it's not going to be a mad race to have millions of square foot under the belt.
Last couple of questions. You did mention that with rising interest rates, it is going to impact, sales demand. I'm now going to look at average rent. In the 7 major cities of the country, how is the monthly average rent in expensive residential colonies, high-end residences, as it were, shaped up over the last 2 years? Are tenants looking at large-size houses now post the pandemic?
So let me just correct you there. I did not say that rising interest rate will necessarily, hurt the demand for
Okay.
residential. I think what it may do is till the time it kind of, if we talk about mortgage rate, if the mortgage rates go back to about 9.5%, I think we in India are very used to giving 9% mortgage rate. Right now, if it starts hitting double digit, another issue. There may be some dampening given, uncertainty around the global, but I don't think it'll be a big impact, primarily because residential, it was basically a sector which did not move for 5 to 7 years, right? So there's a lot of pent-up demand which is out there. So let's kind of get that out of the way. From a rental perspective, it's a global phenomenon, Hrishi. Everywhere in the world, rents are on fire. And in most places, including the top 7 cities in India, rents have gone up between 35-40% to 60-70%. It's also become a little unreasonable because this kind of increase becomes a bit unpalatable and unreasonable. So I think in the short term, it may calm down a bit, as in it won't obviously continue to rise. But ultimately, we've also got to see that India has had one of the lowest rental yields in the world at about 1.5%, particularly in luxury properties. And so therefore, there may be a structural shift happening where, the rental yields rise a little bit more. And the capital value appreciation dampens a little bit, right? Because ultimately what India was very low rental yield market, but very high capital returns market. And that may kind of rebalance itself a little bit. And the second thing also is that the demand always outstrips supply in a massive market like India, because luxury property is obviously aspirational and people want to get onto it. But if the rental increases at such high pace, then what happens is a lot of people get priced out of the market, and that in the short run, and that kind of pulls back the rental a bit. So I feel that the rentals will kind of stabilize a bit, but the market's doing well as long as people have jobs and those jobs are kind of paying well. You'll probably see the rental market doing well.
Well, let's close with a bit of music. What kind of, music and lifestyle, what kind of music are you passionate about? Is there a concert you went to recently in Singapore or any other part of the world, or maybe, back in India when you were here? So that'll be a nice way to sign off.
I listen to all kind of, it's very eclectic collection, right? It's not anything, in particular, but Western music, I love Adele. I mean, I've watched her twice, and I think I could go and watch Adele every year once. I mean, it's just, amazing. And I think closer home to India, I kind of like a little bit more sort of Indian fusion. So people like Indian Ocean during my times, a lot of people may not know them, but they created some great music.
They're still active and touring.
Yeah, Pawan, I think he does very well. In fact, I saw Pawan recently here in Singapore. So he was fantastic and great entertainer. So I like young rising bands in India who do slightly different music.
Lovely. Minding My Business, the CEO Story Season 3 shall continue next week with Radhadhi from JLL. It's powered by Nucleus Office Parks. And big thank you to you, Anshul, for sparing your time. We really appreciate it, and being a guest on our show. Cheers.
Well, thanks for having me.
94.3 Radio 1.